Alright, so you've heard about investing, right? Stocks, bonds, maybe even crypto. But if you're like most people, it all sounds a bit overwhelming. Don't worry, I've got you. Let's break down the basics with a few numbers that might just change how you think about your money. First up, stocks. When you buy a stock, you're literally buying a piece of a company, like Apple, Netflix, or Nike. Over the last 50 years, the average annual return of the S&P 500, which tracks the biggest US companies, is about 10%. That means if you invested $1,000 20 years ago and left it alone, you'd have almost $7,000 today. Not bad for just letting your money work for you, but stocks can be risky. The value goes up and down, sometimes fast. That's where bonds come in. Bonds are basically loans you give to companies or even the government. In return, they pay you interest. Historically, US Treasury bonds return about 2 to 3% a year. Not as exciting as stocks, but a lot more stable. Now let's talk about why you should care. Young adults, like you, have something most investors would kill for: time. Thanks to compound interest, even small amounts invested early can grow into something huge. For example, if you start with $100 a month at age 22 and stick with it until you're 62, at that 10% average return, you'd end up with over $700,000. That's the power of starting young. But what about the beyond part? Nowadays, there are tons of options. ETFs, which bundle stocks and bonds together, or even socially responsible investments that align with your values. Data shows that since 2005, global assets in sustainable investments have grown 15x. So you can make money and make a difference. Still, here's the golden rule. Diversify. Don't put all your eggs in one basket. Studies show that a diversified portfolio can reduce risk by up to 40% compared to owning just a few stocks. And remember, investing is a marathon, not a sprint. The worst days in the market are often followed by the best ones. If you miss just the top 10 best days in a decade, your returns can drop by half. So whether you're into stocks, bonds, or something new, the key is to start. The data says it all. The earlier you begin, the bigger your future could be. Let your money do the heavy lifting. Your future self will thank you.